I think there's just a big misconception with investing is that you need to be some sort of millionaire or something before you start, and it just isn't true. And again, I'll come back to with the stock market, crypto, everything like that, that's struggling at the moment. It's good to have that diversity and have these other investments. Every gold coin is made for a specific reason. So generally they have historical significance. So for example, the Queen's Jubilee, it's definitely one of my favorite investments. Like, to put it very simply, I've had like a 0% capital loss throughout the whole time. For the sake of transparency, at the moment, I've probably got like 30k in loans and probably another 10 in the next week or so.
Welcome to the Takeoff Experience, where I sit down with highly driven people to talk about their journey, their failures, and their successes. If you want to take off in your career, your business, your finances, or your mindset, then this podcast is for you. Welcome back to the Takeoff Experience. How are you doing today, Kevin?
Yeah, I'm very good, thanks. How are you?
Yeah, I'm good. I'm good. I'm late actually today to the studio because there was a lot of traffic on my drive here. So yeah, that was a bit stressful. And then I literally got to the end of the road, and then there was traffic lights, like new traffic lights. I was like, no, okay, today is just it's just a bit of a nightmare. So yeah, introduce yourself. Who is Kevin?
So Kevin, if you haven't already copped, is Irish. I am currently a wealth management contractor.
Okay.
Entrepreneur, founder of KC Capital, and serial investor.
Okay, wow, serial investor. We're going to talk a little bit about alternative investments actually today. So you say you're a contracting wealth manager. Can you give us a bit of an insight into the day in life?
Yeah, for sure. So, well, my day officially starts at 9 a.m. roughly, but I'm usually trying to get to the gym before work nowadays. Then standard, either I'm in the office or I'm work from home. Normal 9 to 5 really. And after work nowadays, I'm obviously working on my own business.
Yeah.
So it's a lot of working at the moment.
It is a lot of working.
Like I was saying, like just a minute ago, obviously I'm finishing up in the corporate stuff this week. So it's all sunshine and rainbows at the moment.
Yeah, and you're planning to travel, right? You were telling me.
Yeah, travel, and obviously I'll be doing KC Capital stuff as well.
Okay,
so
cool.
Digital nomad thing.
Can you tell us a little bit about KC Capital? What it is?
Yeah, for sure. So obviously I mentioned wealth management. Like wealth management in a Swiss investment bank is essentially helping to manage the really high net worth clients' money.
How high net worth? How high are they? Ultra millionaires? Oh, wow. Okay. Yeah. Do you actually speak to them?
No. So I'm a business analyst. So I kind of work alongside the relationship managers. I don't directly handle the client's money or anything.
Okay.
But to be honest, I see a lot of the process just from that anyway.
Okay.
So I think with KC Capital, to be honest, a lot of it was that I just kind of realized that obviously coming out of uni, I was helping to manage these people's money. Yeah. And not even really having much money myself.
Okay, yeah.
It was an entirely...
So was the case.
Yeah, it was like an entirely different situation. I had to obviously figure out what to do with myself to get to that sort of stage.
Yeah.
And I think I just kind of realized, especially from my friends, people at home and stuff, that people don't really know what to do in terms of investing a lot nowadays. Even some of the basic financial literacy stuff is kind of missing. And that kind of just made me feel like, okay, there's a need here for someone to help people with things like this. And also, it's kind of nice to help people that are a bit more average and on the lower scale of wealth, as opposed to just these people that don't necessarily even notice,
It's interesting, isn't it? Right? Is it interesting because you've been in that world and you've experienced it? And have you found that, is their financial literacy better? I mean, of course they've engaged, you guys to do it, but is their financial literacy better or?
It depends, I think. I mean, because I don't have direct client access a lot of the time, I don't even get to see what they what their kind of setup is.
Mm-hmm.
But to be honest, I do think it is a bit of a case of here's this, you guys handle it. You know, they don't necessarily have to think about it too much. And obviously, to get to that stage, a lot of them will have had good investing skills or even just knowledge. But I think there's a lot of them that are kind of born into that sort of lifestyle as well. You know?
That would be nice. That would be really nice. Oh man. Okay.
That'd be your kids though, right?
Yeah. Well, yeah. Hopefully, yeah. That's what we're trying to do. Generational wealth. Trying to pass on to the kids, all the way down. But we have to make sure that they know how to manage it as well, not just like passing it on and they don't know what to do with it. You know, I think it is very important. Yeah,
you could pass on generational wealth, and it could last 24 hours if your kids don't know what they're doing with it.
Exactly, and yeah, that would be a nightmare. Wow, that's so cool. So okay, so you mentioned that you're a serial investor. What sort of things do you invest in at the moment?
So it does obviously vary from like time to time, but quick list of stuff that I generally help people with and invest in myself is obviously the likes of ISAs, index funds, gold coins is a big one. You mentioned alternative investments, so that's one of those. Peer-to-peer loans, dividend producing bonds, a small bit of angel investing.
Okay. Oh, nice.
Couple other things, some other small like riskier plays like trading algorithms and bots and things like that. That's kind of more smaller money that can also produce like the best returns, but it's not like a big part of my net worth, obviously.
Okay. Interesting. And we wanted to talk mostly about peer-to-peer loans today. How did you get into that yourself?
How did I get into that? So I think, again, as I mentioned, like when I started contracting, I think it was just a big, it was different to what I was normally used to. I kind of had to learn to manage my money a lot better. And I just was researching like every day in, day out, really. There's two types of peer-to-peer loans. So I think I kind of came across them like at separate times. But honestly, one of them was Google searching myself, and then another one was probably like from like a networking standpoint. I would have met some people that were looking to raise money and kind of came across it in like a more informal way as opposed to like looking for a peer-to-peer loan.
Okay, that's interesting. And for those that don't know, what is a peer-to-peer loan?
So it's quite simple actually. It's a you hear peer-to-peer loan and no one really knows what you're talking about, but at the end of the day, it is just a loan between two people. You're essentially, well, think about it this way. If you keep your money in the bank or normal current account, you're essentially loaning your money to the bank and they're going to invest it on your behalf or keep all the profits, except for obviously 1-2% interest yearly. Peer-to-peer lending is the exact same thing. It's just you're replacing the bank with someone else, essentially. And you're getting a lot better of an exchange rate or an interest rate in exchange. And that's the gist of it, really.
Yeah.
There is a couple of ways you can do it. So, like peer-to-peer basically implies like person to person. It can be like between a person and a business, but there's some issues there as well you need to be kind of concerned with. But yeah, generally it's either directly with a business connection or partnership, or it's through like a marketplace or platform that like enables it essentially.
Yeah. And what's been your experience? Can you take me through your experience with peer-to-peer? And yeah, like, has it been successful for you? Has it not been what you thought it would be?
I don't think it's been what I thought it would be, but it's definitely been successful. Like, in all honesty, it's definitely one of my favorite investments. Like, to put it very simply, I've had like a 0% capital loss throughout the whole time. So
okay, that's interesting.
No losses at the end of the day is not something you can't really complain. like usually I'll have some money invested in a loan, but at the moment in particular, it's a bit more. So like for the sake of transparency, at the moment I've probably got like 30k in loans and probably another 10 in the next week or so.
Okay.
So it's obviously something that I trust myself. I've had really good success with it. I don't think I've actually had a single issue yet, and fingers crossed it'll stay that way. But yeah, I try and do both ways. As I mentioned, you can do it like via a platform online or directly with people you know. And I have like developed quite a few like contacts over the past few months in particular and years, who I like have good relationship with now. I've done it a couple of times, and yeah, as I said, I've no issues. So I'm gonna be continuing for the future, definitely.
Talk me through the one that's not a platform, because I'm familiar with the platform one, but the one that's off platform. Yeah, talk me through that. That seems quite interesting.
Yeah, so as I said, like that's what kind of happened with the networking, so to speak. Although at the time it was literally just I was kind of inquiring about getting into property, and someone put me in touch with one of their friends. I ended up speaking to him for a while. He helped me with just strategies and things. And at the time, I kind of decided not to go that route, but for now. But he, like, I'd been following him for a while then, and I saw he was looking for like investment essentially. So he was just putting out online, okay, look, I'm looking to raise however much for some project I'm working on. So having spoken to him, I wanted some more details essentially. You essentially need to sit down with this person, go through their investment pack. They'll generally have something that they're raising money for, and probably have been raising enough money that they can't be just getting like tons of mortgages.
Yeah.
So they're obviously looking for external investors. So they'll have like an investment pack of, look, if you invest this amount for this length of time, this is what I'm going to be using it for. So you get like a good kind of insight into actually what your money is going to be going towards. And then it's literally a case of going through the terms. So you need to agree interest rate, length of period, generally and ideally there's collateral on hand. So if it goes badly, they have something backing it in terms of security.
Smart. That's smart. Yeah.
And yeah, then once you've agreed terms, you've gone through the proposal, the investment pack, it's literally just a case of signing that, sending them the money, and then from there it's completely passive. And that's probably the best part of it from my perspective. Wow. Is that once you've given them your money, essentially you don't actually have to do anything, and you're earning every single month.
Wow.
So yeah, that's that side of it.
That must have been nerve-wracking. And were there like because it sounds like you vetted them. Were there anything in particular that you were looking for just to assure you that, yeah, this is it's safe to give this person my money?
Well, that's the thing, and like you kind of summed it up there, is that when it's the direct loans and it's not like through a platform, you're not really investing in, like, let's say property or whatever the loan is for. You're generally investing in the person, because at the end of the day, they're going to use it for what they said, but it's kind of on them to get the money together to be able to pay you back. Mm-hmm. So from my perspective, I wanted to get to know the person. You should meet them in person. Contract is really important. Like at the end of the day, no one wants to have to follow up on a contract and go through lawsuits and everything, but so long as it's there in place to cover you, you don't have to worry as much. And you should be making sure that obviously there's specifics in terms of securities, length of period. If it runs over the time period, are you going to get extra interest? Or because if you don't cover that, and I have found that like a lot of the time they won't necessarily automatically include that, so you could be stuck in a position where you've loaned your money out for 6 months, but you end up having to loan out for a year and nothing changes in terms of return, which you want to cover, of course. But yeah, I mean, the first time it was a little bit nerve-wracking, but at the same time, I had spoken to this guy and quite a lot, and had known him previously, and I'd seen all the like work he had done already, so I was pretty comfortable, being honest. And he also was in a similar position to me. He's like working part-time as like a business analyst as well. So I could relate to the guy, and I had seen anyway what he had been doing in terms of the property space, and I didn't really have too much worries, to be honest.
Okay.
Yeah.
Okay. Interesting. And have you done peer-to-peer loans on platforms as well?
Yeah.
Okay.
So that's how I started initially, actually, and that's kind of how I became familiar with it. There's quite a lot of platforms that offer it. You said yourself you're familiar with it, but to be honest, from what I've seen, a lot of them are questionable. You do.
Which ones are the questionable ones? Actually, are we allowed to name names? I don't know. No, actually, maybe let's not name names, because I'm not trying to get anybody, but there are questionable. Okay, so what? Since we can't name names, what should people look out for?
Well, I mean, a lot of the time, the likes of Trustpilot will tell you what you need to know in terms of questionable platforms, because I know myself, if I feel like I've been like scorned or done badly by something, I'm going to review it more often than not. So I think if obviously there's a lot of negative reviews, something to avoid. You also, like with the platforms, you do really have to do your due diligence. So, for example, I think if there's a ton of loans and they're not necessarily getting funded easily, that's kind of a negative sign, because at the end of the day, if the platform, you want the platform to have been doing a bit of due diligence themselves. So ideally, they're going to have vetted the project to a certain degree and are comfortable to put it on their platform anyway. But if there's just tons of projects that aren't getting funded, like why is that? Is there something wrong there? Maybe. Also, to be honest, there is only one platform that I've found that I actually would recommend to people, and that's because they have, again, similar to myself, they have a 0% capital loss over like a 10-year period.
Yeah. Which
is encouraging. They're FCA authorized. They've won tons of awards, specific peer-to-peer lending awards. And, well, I can get into the specifics of how that one works if you want.
Yeah, please. Yeah, that'd be good. That'd be good for the listeners to just, Yeah,
so I think, like, one thing I kind of say to people with the peer-to-peer lending is, like, one of the reasons that I do it is for diversity. So, like, for example, at the moment, I know you're relatively invested in stocks yourself. They're not doing amazingly.
They're not. They're not, no.
And a lot of people are feeling that at the moment, whereas with the peer-to-peer lending, for the most part, it's a set interest rates over set periods, so you don't really feel a difference for things like that. But in terms of diversity, with this particular platform, it has an auto invest feature. So basically you upload your money, and this is a good one for people that want to get into property but don't necessarily have the capital, because the minimum upload is like £500. So that's the starting point. And once you've uploaded that, you turn on this auto invest feature. And this is obviously now if you, let's say you have spare money and you're not necessarily looking to know the full details of every single project that you invest in, because basically your money sits on the platform and the auto invest feature filters it into various projects that are looking for funding on like a daily basis or every other day. So you're talking about £50 or less or more, depending on what you set it to, just being loaned out constantly into various projects. So obviously you're getting the diversity aspect of like being invested in property, but you're also having your money loaned out to tons of different projects. So even if one project is a fail, and I haven't seen that yet, you're losing out on £50, and you're probably going to make that back in interest from the other projects. So it's quite a good one that way. At the end of the day, you're not really risking much in terms of individual projects. One thing to note there actually is, although I spoke about like the stocks being down right now, there is like a lot of people talking about the possibility of like a property crash, which is something that if you are looking at peer-to-peer loans, it is something to consider, because at the end of the day, your money is like, and this is one thing that I'll tell people is, you should relate to or have an interest in whatever it is you're loaning your money to. At the end of the day, you don't really have to care, because your money is getting loaned out and someone else is dealing with it. You don't need to be in the details of what they're investing in. But you shouldn't really invest in anything that you don't agree with either. So if it's property, maybe something to keep in mind going forward is that certain property developers are probably not going to make it through if there is some sort of crash at some point. So
yeah, it is interesting. I'm going to talk to you offline. I might know the peer-to-peer lender you're talking about. I might know them because I think I may have used them before. Okay. I'm still invested in peer-to-peer right now. Okay. There is one that I'm using that is really good. I can't say it on here. If anybody wants to know, just DM me on Instagram and I'll tell you who it is. I think it is. Yeah, this one's good. I think we might be I think I found at least 2 really good ones that I know that have got really good track records. And how did I find out? I found out through obviously doing due diligence, looking at articles, but there's a peer-to-peer forum as well, which was quite good. Okay, cool. So you just, like you say, people give feedback, right? And what's even more interesting is that all the loans that go on the platform, people comment about them on the forums. So you see all the T's, if people have defaulted, if they've lost money, you see all the full details about it. Okay. And also those platforms, they have admins for themselves. So they actually reply to people on the forums. Yeah. So it's really quite cool. But yeah, no, I do take your point, in terms of looking for a platform that's going to diversify, has a good track record where they haven't, lost a lot of money. Another thing that I looked for back then when I first got into peer-to-peer was, I can't remember the exact term for it. It was basically having they have funds, like a funds to cover any defaults. I can't remember what it was called now. And then finally was asset. It's asset backed as well. It has an asset as collateral, like you said. It is interesting because we are looming potentially a recession, as they say, and property crash. So we're not sure what will happen. I think in the last recession, another peer-to-peer went bust, but it wasn't due to a recession. I think they just went bust. I can't remember. It was a really big one. I don't know if you remember which one I'm talking about.
I don't think so, But to be honest, this is one of the reasons that I prefer the direct loans. Yeah. Because at the end of the day, if a platform goes bust, it doesn't matter if the individual project is going well or not. At the end of the day, it's going to screw up your funds somehow. Whereas, as I said, with the direct loans, I feel like I'm investing in the person regardless. And I think you need to have faith in whoever it is that you are loaning a larger sum of money to in any case, no matter what it is you're doing. And I just think I don't really have any worry with the people that I work with, to be honest.
Wow. It sounds like you're almost like an angel investor right now then, right? Well, yeah. In a way.
Yeah, I guess so, actually. It's funny because something that I recently thought is that a lot of my investments is some sort of loan in some sort of way. So like you said, angel investing, if we're talking specifically companies, that's kind of like the standard use case. Whereas you can consider the peer-to-peer loans angel investing in a way as well.
Yeah, it kind of is, actually.
Yeah,
it kind of
it is really.
Wow.
And also, like, even just the bonds that I mentioned.
Yeah.
So, like, at the end of the day, a bond is an IOU. It's essentially a loan as well. So, I think just cutting out the bank nowadays actually offers you, like, quite a lot of opportunity. Which
Yeah. If you really study and you look into alternatives, peer-to-peer lending was definitely one of the first ways that I looked to grow my money before I got into the stock market. And yeah, I got decent returns from it. I'm still involved in peer-to-peer lending. Not directly like you. Maybe in the future I'll do something like that. But yeah, I am still involved. Fantastic. Is there, like, what risks would you say that people should be aware of when it comes to peer-to-peer lending?
Yeah, I mean, there's no investment is risk-free nowadays, realistically. I think it's the same as any market. There seems to be scammers. No matter what you're investing in nowadays, there's going to be someone there that's going to try and take your money off you. So I haven't come across anyone yet that's, like, posed as an investor looking for funds. But I wouldn't be surprised at all if that's happening. And just don't take anyone's word for it. Make sure that you've got, like, the contracts in place. Proof of ID is, like, a big thing at the end of the day. And ideally, if you're loaning someone a large amount of money, you know them personally or have someone to vouch for them. So, like, for example, myself, I obviously did the due diligence on the people that I work with, and I do connect people to them if that's, like, something they're interested in. So in that sort of case, you're kind of limiting the risk a bit, but definitely watch out for scammers, essentially, or anyone posing as an investor. Also, with the platforms, again, that is naturally going to be a risk. Some platforms just don't do any vetting in advance, and you'd want to make sure that they're going to, like, actually cash you out, things like that. I think, to be honest, if you're going through the right means, there isn't a huge amount of risks. Obviously, if you're investing in someone who's investing in a specific area, so property, which is the most common thing really with peer-to-peer, there's obviously risks that come with each industry. So I think majoritively the people that I work with do invest in property themselves. So naturally, with exposure to the property market, I'm exposing myself to some risks that come with the property market. At the end of the day, if they end up going bust because of the property doesn't work for them, then that's a risk for me. But again, you should be alleviating all these risks with collateral, contracts, things like that.
Yeah.
Yeah, I think there's not that much more. Have you seen anything else that you think is risky?
I think what you said in terms of from the platforms that just list loads of loans. There's some platforms that will list crazy amount of loans, and they offer, like, crazy interest rates, 15% up, which is mad, right? I think I kind of take it, not with a pinch of salt. I kind of say I think the general rule of thumb is the higher the interest rate is, the more risky you are. The investment you're trying to do is. So yeah, there are some platforms that will offer a lot of alternatives, but they don't offer any collateral. So they say, oh yeah, 15 to 20%, no collateral. They have, like, 50 loans for you to, and that probably 30 of those loans are just going to default at some point. So yeah, I would say that those two things, like, watch out for ones with crazy high interest rates, lots of loans, because like you said, it means that they're not really vetting them. And then also, I can't remember my final point. It'll get back to me. The ones I like, one of my favorite one is, they barely post any loans because you know that they're vetting it. I think they only have like 1 or 2 a month, and when those come, they get sold out like that because we know
Everyone's into it.
exactly. So
I mean,
those are the ones that you want to get into.
That's a big incentive in my mind.
Yeah.
If it's selling out or funding millions of pounds in literal seconds.
Yeah.
Like, obviously, it's something that people are trying to get into. So
yeah.
you kind of want to be one of those people if you can, and if that's what you're trying to invest in.
Yeah.
But I agree also, like, with the higher interest rates, in all honesty, with any investment, if it looks too good to be true, it probably is.
Probably is, yeah. You just got to be careful and just diversify. I think diversification is very, very important. Don't put all of your eggs in one basket. And talk about all your eggs in one basket, I wanted to talk to you about gold coins, because that's not something I'm invested in. So it'd be nice to hear a bit more. How did you get into the coins stuff?
So, yeah, to be honest with you, until I started in this myself, I don't think I really met many or any people that were investing in gold in that way. And to be honest, it's something that I could talk about for hours.
Really?
Yeah.
Wow.
Again, I said that peer-to-peer lending is one of my favorite investments, but the gold coins is definitely up there as well.
Wow.
So, and again, I'll come back to with the stock market, crypto, everything like that, that's struggling at the moment. It's good to have that diversity and have these other investments that either will remain consistent. So the peer-to-peer loans, for the most part, it remains consistent in terms of interest that you receive and fixed terms. With the gold coins, well, firstly, gold in general as an investment, for the most part, if everything is going badly economy wise, the war, all COVID, everything like that, that generally makes the price of gold rise because people see it as a safety net, and even governments. So you saw the likes of Russia heavily investing in gold right before everything kind of kicked off. So gold in general has like perks, and people often like put it in their portfolios to kind of offset some of the risk of some growth stocks and things. But I don't really, or I haven't at all really invested in gold aside from the coins.
Okay.
And there's a number of reasons for that. So firstly, it's not just the value of the gold that affects the price. So they have good gold content. So the price does rise and fall with the price of gold. But they also have like inherent value from other things. So there's something that I call double rarity, which I basically made up, to be honest. So that's actually a Casey Capital coined term. But basically what I mean by that is gold obviously is like it's not infinite, there's only a certain amount of gold in the world, and because of that, its value comes from the rarity. But with gold coins, there's only a certain amount of every coin minted, so they're scarce anyway, and they're also rare in their own way. So that's what I mean by the double rarity. You're getting rarity kind of from two angles. Also, every gold coin is made for a specific reason. So generally they have historical significance. So for example, the Queen's Jubilee happened recently enough. They'll mint coins for specific occasions like that. And those are kind of the three main value points. So one thing I've found is even if the price of gold, which is quite inflated at the moment, is to massively decrease, it doesn't really matter because the other factors kind of keep the price where it should be or upwards. And that's not it, to be honest. So one of my favorite things, and everyone talks about ISAs and tax being tax efficient, things like that. But one thing with the gold coins is because it's technically legal tender still, you don't pay any taxes on capital or capital gain taxes at all. So any money that you make or any profits that you make when you sell it is completely tax-free, which is a nice advantage. There's also, this is an interesting one, but with any collectible, if it becomes discontinued, if you have like a Rolex that gets discontinued, the value generally increases by a lot. With the gold coins, it can be hard to tell when something's going to get discontinued because you don't know when or why they'll stop minting a specific coin. But one thing I'd say is that because all the coins at the moment have the Queen's face on them, when she eventually is to leave us, those coins effectively will be discontinued. So they'll stop minting gold coins with her face on them.
Right.
From that point onwards, there'll never be a gold coin with her face on it again. So naturally, over time, the ones that are there now and that people hold now are going to increase in value quite steadily from that point. It's kind of a hard one to like measure, but that's something that I'm not holding out for her to leave
Yeah,
us.
that would be harsh, right?
But it's an upside if she does pass away.
Okay.
Those will all likely increase quite a lot. Also, I could literally, as I said, I could go on for a while about these.
We'll definitely do a part 2 on it.
Yeah,
definitely,
for sure.
It sounds like interesting. I wanted to. Okay, I've got a few follow-up questions before we wrap up.
Yeah.
Around the gold coin. So, how do you find them, and how do you make sure that they are authentic?
Okay, so that's a good question actually. So, firstly, not every gold coin that you buy is going to be a good investment. So, I only really invest in commemorative gold coins. So they'll have a grading on them. So, like you can get cards and things graded by official companies or whatever. It's the same thing with gold coins. There's the NGC and the PGCS, I think, or something along those lines. It's just a grading service. So it'll have a code that you can look up. But at the end of the day, if you buy something off eBay, it could easily just be a picture of something, and there is quite a market for like fake gold coins. So you need to have a trusted broker is all I would really say. So that's actually how I came about with this, is that a friend of mine's brother works for one of these brokers in London. And because I know him personally, obviously anything I buy through them I know is legit. They also... The way their business model works is like fantastic for me as an investor, because they'll only take profit when you eventually sell it back to them. So if you buy something off them right now, they're not taking any commission or anything. So you're getting essentially the cheapest price that you can get. But also they will only sell you coins that they see as good investments, because they'll take a set percentage of 4% at the end when you sell it back to them.
Right.
So if they're taking a set percentage of 4% and you end up losing money, that's a nightmare for them. They've made no profit. So they're only going to sell you coins that they know will do well over time, because that 4% could be 4% of 30 grand, or it could be 4% of £100. They're going to take 4% regardless. So they want you to profit. You obviously want to profit. It's kind of like a win-win situation, to be honest.
Wow. That is such epic. We're gonna have to talk. I need the contacts.
Well, that's one thing. If anyone is intrigued slightly by what I've kind of said there, whether it's the peer-to-peer or the gold coins, just feel free to drop me a message. I'll happily introduce you to my broker. Or if you want to do the peer-to-peer lending through someone that you trust, I'll facilitate that either directly, or so I'll put you in contact with my contacts. Or if you really want to be safe and guarantee your money, I'll probably take the loan as well myself. But there'll be a percentage fee, of course.
Of course. Yeah, you got to do what you got to do, right? Well, are you doing that with other people at the moment yet?
Yes, I have done that a couple of times.
Okay.
It's something that, like, being honest, until I'm more well known, I suppose, I'm not going to get it from a lot of people that don't know me personally. Because at the end of the day, anyone's skeptical handing over money to someone.
Yeah, it's only that's understandable.
But no, it's only, and as well because like I obviously, if I'm taking people's money and facilitating loans like that, then I need to be very sure in the loan that I'm also going to put it into. So I haven't done a huge amount of them yet, but obviously now my relationships have gone really well with the people that I lend to. So I think it'll be something that I'll be doing a lot more of in future.
Yeah, definitely want to hear more about that. No, thank you so much. It's been great hearing more about peer-to-peer loans. And like I said, we're definitely going to do a second episode on gold coins and any other coins that you invest in. Can you, like, what's next for you? What do you have planned next?
So I mentioned this in my last week in the corporate thing. So I think the next month is going to be pretty relaxing, being honest. But from that point onwards, I expect everyone to see a lot more KC Capital. Going to be putting out a lot more content. Also working on my offerings. So right now, I'm either doing consultations directly, mentorship packages, or I have a Patreon subscription, which is kind of like a cheaper way of getting all this information because I want it to be accessible as well. But I have a few things in mind. I think there'll probably be courses and things at some point. But yeah, after that month of probably relaxing now for August, I think I'm going to be basically doing what I'm doing now, except ideally abroad, and do a bit of travel at the same time.
That sounds so dope. And where can people find you? So
I have my website, so www.kccapital.co.uk. I'm on every social media, so my Instagram is probably the easiest place to reach me, and that's kccapital_LTD. Although if you do search something similar to that on any social media, you will find me.
Okay, perfect. And have you got a final word for the listeners?
Yeah. So one thing I'll just say is because obviously I'm doing this, or I said I'm doing this because I'm trying to help the more average investor, the more average person to invest their money and handle their money properly. I think there's just a big misconception with investing is that you need to be some sort of millionaire or something before you start, and it just isn't true. If you're listening to this and you've been curious about investing for a while, you don't need to go into anything scary to begin with. You can start really simple. There's investments there for everyone, no matter what your risk profile. And to begin with, you can always start with your investing foundations, so your credit, emergency fund, ISAs, the basics really, and kind of work your way up and get used to it. And also, everyone's aware, obviously, the cost of living is getting crazy at the moment. I think, what was the most recent one? 9.1%?
Yeah, about that, yeah, 9.1%, yeah, inflation.
At the end of the day, It's becoming a necessity. But just in terms of helping to deal with the cost of living, I recently set up some new partnerships. So if anyone is looking to get a cheaper quote on their car insurance, life insurance, any sort of insurance actually, bills, phone contracts, Wi-Fi, home boiler insurance, anything like that, drop me a message, because it's crazy. Only in the last few weeks, I've met a lot of people, and I'm literally able to guarantee savings on all those things at the moment.
Wow.
And it's something that, in particular, energy at the moment, it's getting out of hand. The new price cap is crazy, so you need to be doing what you can now to reduce these costs. And all it really takes right now is to drop me a message, and we'll try and get you a cheaper quote on whatever plan it is you have. And finally, make sure if you're listening to this and you don't know my guy Atto here, follow and tune into his podcast, because there's a load of good information there.
Thank you, bro. Thank you. No, it's been great having you, Kevin. Thanks so much into your insights into your world, peer-to-peer loans, gold coins. I'm so intrigued. I can't wait for the second episode about gold coins. I know so many people are going to be pumped to hear about that, because it's not something that we speak about. And I think when something's unknown, people get scared about it. Even with peer-to-peer loans, a lot of people don't speak about peer-to-peer loans. But, you know, like you said, there's an element of risk in everything. It's just about learning how to manage that risk. Because there are rewards and there are people making money from this. So yeah, hopefully we can help them. Thanks listeners for listening to this episode of the Takeoff Experience. And we'll see you next week.